Here we go. Here we go. Back to work tonight. Boy, oh boy, that weekend flew right by. Is it Monday? No, it's Tuesday, isn't it? It is Tuesday. Hope you guys enjoyed the holiday break on Monday, but it's time to get back to work as always. It's the 12th day of October, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. I missed you guys yesterday in that kind of weird, right, half holiday, day off in the market. That's all right, though. Back to work tonight. Got a great video in store for you guys and gals tonight. Charts are already in the background, as you can see. We got the S&P, the NASDAQ, and, of course, the gold futures, my three amigos, my favorite markets. Got a lot of great trades on my radar for tomorrow. A lot of bears in the market right now. Bearish on the S&P, bearish in the NASDAQ, and looking like these bears are trying to take this thing lower here on the gold right now. I've got some great trades on my radar for tomorrow. That, of course, is a very big, important Wednesday trading session. By the end of this video tonight, you'll know my favorite trades, where I'm looking for the entries, the setups I'll use. You'll also know where to stay out of trouble tomorrow, so you can finish the day in the green, whether you're trading with us in the trade room or you're trading on your own tomorrow morning. Before we jump into the video tonight, though, as always, make sure you subscribe to this YouTube channel. We publish these videos every evening on this YouTube channel. I don't want you to miss tomorrow night's video, so make sure you subscribe so you don't miss all the good stuff coming out every day this week. If you have any questions, drop those questions for me. I would love to answer any questions that you might have along the way. And if you enjoy the video as much as I enjoy making, hit that like button for me if you guys enjoyed this content here on this video tonight. But enough of the intro, though. Time is ticking. I'm a little bit late. I had a busy day today. And so a little bit late here to the video tonight, so I really appreciate you guys sticking around here with me. S&P's ready, NASDAQ's ready, gold's ready. Glad to see you are ready right along with us. Now, got a lot of, like I mentioned earlier, a lot of bears in the market right now. We're rotating lower on the S&P, rotating lower, and potentially rotating lower here on the gold. Now, obviously, anything can happen in the overnight markets, but if things hold up right now, there are a lot of really good short setups on my radar for tomorrow. The S&P, of course, has a big bullseye taking out that low. I'd love to grab some traps, some failures. I mean, there's some really good short setups right now on the S&P going lower. NASDAQ, you'll notice, has already taken out those lows. I've still got some good spots to short in the NASDAQ right now, but we've got to be a little more, we need a little bit different entry signal. Let's put it that way. We'll talk about that as well on the NASDAQ. And of course, plenty of resistance zones overhead. If this thing pops, we'll be looking for that short back down again. Lots of space down here for breakouts. So obviously we'll have some breakouts on our radar for tomorrow. And I'll tell you, on the E-minis, this range is right above us. So, I mean, let's not forget, this could easily rip right back higher here again. So I've definitely got some reversals we're going to watch out for as well. So there's definitely no shortage of trades here. I'd like the short side right now, but I'm a trader. You're a trader. We'll take whatever the market gives us. I get some long side trades, some bounces off these lows we'll keep our eyes on for tomorrow as well. Over on the gold, of course, gosh, there's so many good trades short on gold right now. Would love to short the pop on the gold. We get some trend lines coming in, though, so I got to be careful on that entry up there. We'll talk about that here in a lot more detail. And man, oh man, would I love to complete this pendulum swing as it rotates back down again. Would love to short this thing as it rotates. Got some really nice targets down there. 1744 will be kind of the big home run target. And don't forget, on the gold right now, there's a bunch of levels of support down here. So sell it high, buy it low, trade the rotation. It could be a really busy day tomorrow on that yellow metal, because we've got some big news tomorrow. Let's grab a look at the news here before we jump into these charts here, because we do have what really could be the biggest news of the week tomorrow. I'll tell you, the next 3 days, there's a lot of major news on this. Tomorrow morning, of course, is the CPI report, and I'm definitely not talking about the FOMC minutes. That's pretty much irrelevant at this time at this point in the game. CPI number tomorrow at 8:30 Eastern time is definitely, if it's not the biggest news of the week, it's the second biggest news of the week because you get the PPI number, of course, is going to come on Thursday. Retail sales going to be pretty good, pretty important too. So you can see we are really, again, pick your poison. There's some really nice big news events to kind of kick off the day for the rest of the week this week. Now, of course, don't forget, we're not trading news. We don't trade news, but we love the fact that news oftentimes creates an imbalance in the market, and so we oftentimes get pretty big moves, on whatever our favorite markets are. Now, remember, CPI, inflation, right? The Fed has basically come out and said, they're ready to start tapering. They're ready to start, withdrawing some of that stimulus. We heard from you see right here. We heard from Clarida, the vice chair of the Fed. He according to him, the progress has been more than met, and they're ready to start tapering. So we assume at any point here now, the Fed's going to say, all right, we're going to start tapering in the month of November. And I would imagine that's what a lot of these markets are, because gold's range bound, S&P, NASDAQ's been range bound. I would assume a lot of these ranges will start to work themselves out once they kind of officially turn the corner and start this tapering process. In the meantime, we're going to keep on trading these ranges. I love ranges, as you guys know. So we'll keep on trading those ranges in our trade room. So big news tomorrow is at 8:30 Eastern time, right? Be aware of that. And don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. What I'll do is I'll put all the membership links for you guys there in the description of the YouTube video here. Grab that link. Come join me tomorrow morning at the opening bell, and right, we're going to be trading this stuff together here tomorrow at the open. Also, too, I should make you aware too, there probably won't be any newsletter on Thursday afternoon. I had something come up here, unfortunately, this afternoon. I got to be out of the office on Thursday, late Thursday afternoon. I'm not quite sure if I'll have time to get that newsletter out for you guys. I may put out like a psychology video for you instead on Thursday. So just going to be aware of that, right? Be aware of that. I wasn't planning on it, but I will likely be out of the office later, late in the afternoon on Thursday. Unfortunately, got to fix some stuff outside the office, and I probably won't have the newsletter sent out for you on Thursday. So not to worry. We'll, of course, come back tomorrow night for our weekly psychology video. And you guys are going to love some of the stuff I'm working on in that psychology series right now. They're going to keep getting better every week as we keep going. All right, let's get back to our charts, though. I'm wasting too much of your valuable time. So we get some big news tomorrow, 8:30 Eastern time, right, as always. So we're hoping that will kind of be a good catalyst for us tomorrow morning in our 8 o'clock trade room. S&P, NASDAQ, gold, they all look pretty similar, don't they? Let's grab a look at the S&P. There's going to be a lot of similarities on these charts because, again, they're all range bound for the most part. What's going on right now on the E-mini? Really, for the most part, there are kind of three main components right now. One is that really big move down, that we saw what was yesterday's holiday session, and then, of course, into the kind of bled over into the overnight, early part of the morning here in Tuesday's, morning session. So basically, any, strong move. Anytime we see that much strength in any market, this just happens to be the S&P 500, my favorite out of all of the futures contracts. Anytime we see this much momentum in one direction, we know the odds are very good that we go up and retest that low. And so we right now we know there's a big bullseye right on that low, and the sellers are obviously trying to get there as we speak. The second component that we see here is this trading range. Right, this trading range. Now, of course, ranges are magnets, and so you can kind of see what happened today, right? They had that big move down, they popped it back up, and they kind of, traded sideways there, as you probably saw. And if you're with us in trade room, we pretty much spent the morning just kind of buying low and selling high, trading around that range here today. That range, of course, acts like a magnet. Okay, so kind of keep that in mind. That's going to be the second component on this chart. The third component is kind of a piggyback of that second component, and that is rotation. You'll notice how the market popped up, took out that high, and then now we're rotating as we go lower. This rotation is very, very important because it oftentimes will produce quite a bit of momentum, right? So get a lot of bears right there. They want to retest the low. The range is the magnet, of course, but as we pop up and begin to rotate lower now, there's a lot of momentum now for those bears, even though there's a range above us, right, which we definitely know is a magnet. That's why I said earlier, there's a lot of good shorts on our radar here for the S&P. The bears, of course, want to get back to retest that low. They would love to keep this party going down to that 4280 area. That seems to have been there for a year now. That 4280 area is a definite objective if we can keep this party going. If the buyers can get their hooks in this thing, they'd like to go back up and retest these highs. The buyers would really like to get back to that 4380 half area because that's the closing price from last Friday. We talked about this in the trade room this morning. Most of the time, when you see something like this where you get a Monday holiday, and of course, most of the time when you have a Monday holiday, the market will, the market oftentimes will move on a Monday kind of half holiday, as we call it. The banks are closed, the schools are closed, but the markets are technically open. Usually we don't see as much movement as we saw yesterday or as much volume as we saw yesterday. The point I'm trying to make, though, is oftentimes on a holiday on Monday, we oftentimes see a kind of a big move. It's usually pretty low volume. It's usually kind of a sleepwalker, kind of zombie type mark because, again, it's not really, the highest volume thing in the world. The bottom line, though, is when we come back on that Tuesday after the holiday, we almost always find our way right back to where kind of the holiday session began. It's almost as if the markets want to redo. I call it the snapback, right? You probably have heard me talk about this before if you've been watching this video for quite a while here, and I commend you on that, by the way. But we oftentimes get that snapback. We end up going, it's almost like the market says, you know what, let's go back to where we began. None of us were watching this stuff over here. You know what I mean? It's almost like the market wants to go back and kind of redo, and they'll go, okay, now we'll go back to where we were before. That situation happens very, very frequently. In fact, I can't think of the last time it didn't happen before today. And so you can see that's what happened, right? The market tried to go higher here. They really, and I was pretty surprised that the buyers weren't able. It's usually a pretty easy snap back, and then oftentimes it'll just collapse right back down to where it was, before. So, long story short, right? That's why the buyers would love to get back to that 4380 half area. And if they can really keep it going, there's that 4400, 4401 up there. That's going to be a nice juicy target there for the buyers going higher. So we got a pretty good lay of the land. We know what's going on here. How do we trade it now? Where would the best entries be? That's again, like I mentioned earlier, get some really good shorts as we go here right now. If I had it my way, if I had it my way for tomorrow, and again, we'll see how the overnight session kind of holds up here. We have that rotation going lower. We know the bears want to retest this low. If I had it my way for tomorrow, I'd get that trap off the high of this prior swing, incorporate that channel, grab that trap entry, lock in those buyers around the moving average with a failure entry, and then hit them again on the pullback entry, right? So there literally are three different ways you can short this thing. The first one, of course, is the trap. The second one is the buyer failure as they try to buy the pullback, undoubtedly going back higher again. We sell into stop losses. Third one, of course, is just your pullback setup as we go back to take out that low. Trap, failure, and then, of course, into that pullback. That would be a fantastic way to short this as it goes lower. Now, maybe it really jumps, right? Maybe it really pops because, again, this is a range, right? So maybe it really pops and runs and runs back up into these highs here. The range is still a magnet at that point, but now that momentum becomes a concern. So the way that you trade at that point now is you use what we call the two-try failure pattern. We let the buyers try once on the pullback, let them try twice on the pullback. You kind of see how they look right there, right? They pop up, the buyers once, the buyers twice, and then we short back down from there. That is what I'm looking for right over here. Again, if we really pop up and really push it higher, let those buyers try a couple times, and then that 2-try failure, remember, trade the rotation. We can now look for that failure, and then this is where we can grab that first pullback as well. Okay, this is a really common kind of combination where you'll see a failure off the high, right, into that first test off the low of that channel, right? These kind of combinations as we roll off the high of that trading range. I'll tell you, we see a lot of this combination in our trade room. I probably have 100 examples of combination setups just like this, all as part of our quick start class. I'm not going to go into a lot of details tonight about the actual entry techniques we use in our trade room, but I'll tell you, if you haven't done so yet already, grab that little button that pops up there in the upper right hand corner. Grab the quick start class. It's a nice little shortcut course. It's very short. It'll bring you right up to speed. You'll learn my 3-step strategy, how we find the best entries, how we find kind of the 3 to 5 best trades every day in our trade room. I'll show you how to find support and resistance, how to find the right entry signals. And I'll tell you, there are hundreds of examples of how we apply those setups to our favorite markets. Definitely, if you're like me and your goal is to earn daily income in these markets, that three-step strategy, that quick start class will give you a great roadmap to get there faster. So definitely grab that class. Little pop up there in the upper right-hand corner, and I'll see you inside the class videos on our website. So definitely grab that if you've done so already. That'll give us an idea here, right, how to sell this thing as we go. Now, as we go higher here, can I buy this thing as we go higher? We can, but we have to hold the pullback though. Remember, it's not enough just to get a strong run higher. This range is a magnet. So if the market was to pop up, and if the buyers were to hold that pullback and be able to jump higher here, absolutely, I have no problem being a buyer. Like I said, I think they're going to be wanting to hit that 43.80 over there. Now, at that point, again, I'm not going to buy the first pullback. Okay, for obvious reasons. The range is too strong. The bears have too much control. I'm not going to buy that first pullback. But once those buyers hold that pullback and go higher, yeah, now we're on. Now I can mark up that high. I can mark up that low, and then I'm going to drill down to a faster time frame. This is a 7,000 tick chart. I'm going to drill down to a faster time frame, and as you guys learn in that quick start class, I'll grab my failure, my pullback combination, right, to buy off that low. Again, it won't be on a 7,000 tick chart. It'll be on a much faster time frame, and you'll learn more about that stuff inside that quick start class. That's how I'm going to trade this thing as it goes higher here. As we go lower, how do we trade this stuff as we go lower? It's going to be difficult if we don't get that pop up. It's going to be difficult. So as we go lower, the big question I have is do I want to sell into this area? I definitely can sell into that area, but it needs to be a little bit more patient, if you will. Okay, here's how you want to do it. If we do make that run going lower, what I'm going to do is I'm going to adjust this channel down. Okay, we'll adjust this channel down. We'll pop it up. Let's just say something like that, right? Let's say they take out that low, and then we get that pop, right? That pop back up. Now, here's the problem with this. The problem at that point is the sellers have already, as I call it, they've already completed their objective. Their objective is to retest this low. So once they get down in this area, there's not a lot of meat left on the bone, right? There's not a lot of juice left down there for those bears to look forward to, right? If I sell a trap here right now, I have a ton of reward for the small amount of risk. Whether or not it works that way or not, right? But that makes this a very desirable trade. As we go lower, right? As we go lower now if I pull back now, right? Now it's just nowhere near as desirable. So in that situation, I want to be a little more patient on the entry. I've got that range above me. I'm going to use that 2-try failure if we take out that low. I'll let them try once. I'll let them try twice, and because again, I'm going to be anticipating these buyers want to rip this thing back up into that trading range. Once those buyers try twice, though. Once those buyers try twice now stops are right there. And what I'll be looking to do on this one is grab like a trap, right, off that high, grab like a trend line. I'm going to try to sell as high as I can. All right, because remember, the goal, of course, is to get back to that low. We've already accomplished that goal. So you want to rope in those buyers, and you want to really be careful getting short as it kind of shoots lower there. You really want to get that pop, right, as we go. And then I can buy it off that low, but I have to use that 2-try failure again, without sounding like a broken record here, right? If they take out that low now we start looking for the reversal. Remember, the range is the magnet. So we take out that low. Let those bears try once. Let them try twice. Okay, now remember, there are a lot of variations. There are like a half dozen different variations I teach. I teach a lot of those, by the way, in that quick start class. But there's a lot of variations of this 1-try, 2-try failure here. I'll cover more of them as we go deeper into this video, okay? So make sure you watch the entire video to kind of keep the video going tonight. I'll cover more of these variations as we go deeper into the NASDAQ and the gold here. Once I see this thing, the bears trying once, the bears trying twice, now all their stop losses, right? All their stops, all their pain points are now hanging out right above that high. Now, if I can see a nice, strong, juicy signal candle now the buyers are going to want to grab this thing and run this thing back higher again. At that point, I've got my 1-2-try failure, and then what I'll do is I'll roll up a new channel, find that high, find that low, and again, just like we talked about selling off the high earlier, I want that first test. Right? That first test is always the best test off of that low. Does that make sense? It's a failure. It's a 2-try failure because, again, you're going against the overall momentum. And then, of course, into that first pullback. All right? And then last but not least here, how do we trade a breakout? How do we trade a breakout here? Boy, there are 3 different types of breakout patterns I trust the most with my trading. I'm going to cover one of them here on the S&P, and then make sure you keep watching later on in this video. You'll learn others as we go here. Now, they take the low out. They hold the pullback off the moving average, and they jump, right? They jump now off the moving average. They couldn't do it here, right? They haven't done it yet. So again, we can't sell that first pullback, but once they get that 1, 2, 3 breakdown, now it's on. Mark up that low, mark up that high, drill down to your faster time frame, find the entry. The 2 most common entry setups or entry triggers off the high of that new channel are bull traps and buyer failures. And again, you can learn all the rules, how to find the channels, everything, all that stuff's covered inside that quick start class. So definitely grab that. You'll learn more there. Let's keep this video going though here, right? So we can keep this party rolling. S&P is looking pretty good. Get a great plan of attack to buy it, to sell it. I know I'm covering a lot here right now, so don't forget, tomorrow morning, we're going to do all this together in our trade room. Let's keep going. NASDAQ's up next. Now, the NASDAQ, you'll notice, very similar on the NASDAQ. You can see there's that big move down. Yeah, you can see they tried very much to go back and, what I call it again? Snap back, right? Snap back. I know it's kind of a corny name for it, right? But that's kind of what it feels like. Again, there's the closing price from last week. Again, a lot more movement than we normally get on a holiday session. I'm sure a lot of that was because of the news from this Chinese real estate situation going on right now. I think a lot of that was caused by that. There was 300,000 contracts before we even woke up on Columbus Day. So definitely, again, a lot more than we expected to be. Get that big move down though. Again, you could definitely tell the buyers would have loved to get back to that area and then just dump it right back down to retest the low. I'm telling you right now, that didn't happen today. But this is the only time I've seen this not happen I can't even recall the last time we had a Monday holiday, like a President's Day, an MLK Day, Columbus Day. I'm trying to think of what other Monday holidays they give us. I think there's one more out there. Maybe you guys can let me know in the comments section. That way I can remind myself for next time. But the reality, though, is they didn't get it done, right? There's a big, no, there isn't an open loop anymore, is there? Right? Remember, big move down. Those bears want one thing. They want to retest a low. So now we've got that retest. That's the big difference, for the most part. That is the big difference here. We still have the range. The range, of course, is absolutely still a magnet. I definitely still want to sell short. We're still very bearish. Would still want to sell short. Again, range is a magnet. And as you can see now, the NASDAQ has a potential for a breakout, right? And so we'll talk about some more of these breakout setups here as we go into the NASDAQ here. So we've covered a lot of this stuff already on the S&P. Pretty much, I would say for the most part, everything we talked about in the S&P can also be applied on the NASDAQ, except for one. And that is, I really can't be as aggressive on this pullback. If you recall on the S&P chart, I mentioned that if we do get to retest, then we got to pull back and try to rope in those buyers a little bit, right? With that 2-try failure. That is exactly what I'm going to have to do here right now. I love the idea that, don't get me wrong, I love this little trap area right there. I love this area right there. You get that trap area, that trend line coming down. And we might get it. We remember, guys, in all reality, I am like any other trader. I'm wrong more than I am right. Obviously, I'm not going to take that trade. I'll wait for my setup. But sometimes we get stuff we don't normally expect there. That could definitely happen here. But what I'll be waiting for, though, for the entry is I'll be waiting for a 2-try failure. I would love to get that trap off the high there. Would love to get that trap into a failure. My problem, though, is we've now completed the objective. And so now that range is just, the pressure's off now, right? The bears aren't beating their chest anymore. They're not really pushing this. The bears, we assume at this point now, are probably going to take some profit down here. There's not going to be as much reward for the risk that's necessary. So it's not going to be as desirable of a short on the next shallow pullback. Let's get up above the moving average. Let's get up into this area up here. Let's get these buyers now. Let's get these buyers to come in and try twice, right? And as I mentioned earlier, in these situations when you're kind of selling into some lows down here, you really want to try to get in as high up as you can. Can I see a trap entry? A trap would obviously, traps are always the entry setup that gets you in the best possible entry price, right? Because you're selling really high with that trap, right? I'd much rather, what you want to avoid is you want to avoid a 2-try failure that looks like this, right? Like this, 1, 2, right? Like that's a 2-try failure. That's the same pattern, right? But what's the problem? Now you get the signal. Again, the buyers are trying once, the buyers are trying twice, right? Like you want to avoid trades like these. Okay? Now, don't get me wrong. If this was to happen up here before we retest the low, you could take that trade, right? If we've got this big move down, we pop up and the buyers once, buyers twice, okay, I can take that trade, right? Because again, there's all of this, everybody's hunting for that low. Right? But if I get that retest of the low and then we bounce back, right? I can't do that here anymore. I've got to get the entry. I've got to get the entry nice and high. You know what I mean? Because you want to sell high. And traps give us that just superior risk reward ratio that just makes it's tough to lose money when you pick the right traps. It really is. I would say traps are almost the most bulletproof setup that I know. That's by far why they're my favorite. They're not the most common, right? But they are my favorite for that very reason. So, long story short, if we do get that pop up, it's buyers once, it's buyers twice. Can I get that trend line? Right? Can I get something, just so I'm not selling way down here, right? And get that short back down again. That's an easy scalp. As we go higher here, absolutely there's plenty of shorts to be had up top. Just again, got to make sure you give those, right? Like back here, give those buyers the benefit of the doubt. Let them try once, let them try twice. And then don't forget, find that channel and trade that rotation. Right? Same thing over here. Find it right there. So we pop up. we get up into some of these areas of resistance. It really doesn't matter which one, to be very honest with you, because it's all going to be very bullish at that time. The buyers come over, they try to get long, they try once, they pull back, they try twice. Now, do I love a trap up here? Absolutely. That would be the best possible entry. That would be great. Or a trend line coming down, right? That's a variation to it. Or again, if we have momentum on our side, we can simply use those stop losses, right, as fuel, and we can simply short back down into that range. And then don't forget, don't just kick your feet up on the desk. I made this mistake when I was a newer trader. I would take that short off the high. I see the trade collapse and I'm going, pat myself on the back, how amazing I am. Meanwhile, you know what happens? Yeah, this trend line comes over. The market pulls back and we get another one. Okay, this is the easiest way to turn one winning trade into two winning trades. As I always say, don't get lazy with your winning trades. Right? When you're in a nice juicy winning trade, you get all that, right? All that kind of built-in, profit, all that built-in cake, right? In that trade you're in. Now's the time to use some of that unrealized profit. Hit it again. Keep adding to that winning position as we try to finish off that rotation back down to retest the low. Again, I know I'm covering a lot right now. That's why I recommend that quick start class, because it'll break down how each of these pieces work, and you'll get so much more out of this video when you come back and watch it after you take that course. All right, we're looking good. Now, again, as we go higher here, right, I can definitely buy this thing, but the buyers have to hold it and they have to go, right? We got to get that 1, 2, 3 reversal. Remember, it doesn't matter how strong the pullback is. It doesn't matter how strong that pullback is. It doesn't. All that matters is, can they hold that pullback? If they can, now we're on, right? Now we mark up that new high, we find that new channel, we drill down, right? And we grab that first test. The first test is always the best test, all right? And again, there's some variations of that. We'll talk about that here as we go for the low side, okay? Now, as we're sitting on this low, can we buy down here? Absolutely we can. We've already achieved the objective. The range is the magnet. Yeah, we're quite bearish. There's no doubt about that. But we can make this work as long as we stay patient. And what you want to do is like I always say, you want to try to kind of trap in, the easiest money you're ever going to make in trading is when you're getting in and someone who's caught in a losing position is getting out. You know why? Because they don't think about getting out at the perfect exit. Right? How do you get out, right? If I see bears come in and try to sell once and sell twice, right? All those stops, those are market orders. Okay, you know what happens when you trigger stops, right? You get these big pops, right? These big pops. Why? Why do stop runs produce big pops? Because those market orders, they're illiquid. That's why we don't recommend using market orders, because they get you in whatever the market will bear. So all those stops are sitting there. When we see that nice strong signal candle now, okay, and all those bears are caught short down here, not following the advice I talked about earlier, which is sell as high as you can if you're selling down here. Right? They're trying to short right into that low for whatever, right? Usually it's just, ignorance. I don't know any better, unfortunately, right? But they should be watching this video here tonight. So once those bears get caught, right, all their stops are sitting right there. It'll just fly, right? Pop back up with that failure, grab that new channel, and remember, trade the rotation, right? Trade the rotation. Buy it off the low at support, use a failure pattern, and then whether it's a trap or a pullback setup, as it come off that channel, that's where the money is. Remember, don't get lazy on the winner, right? Grab it and keep on trading that winner as it rotates over, okay? That's how you turn one trade into 2, maybe 3 trades as it rotates back up again. As we go lower, we talked about on the S&P, we talked about the 1, 2, 3 breakout pattern, right? We talked about that a couple times already. Another one of my favorite setups is going to be the pop and pullback. Right, the pop and pullback. The pop and pullback is a second type of breakout pattern. And what you want to do is you want to wait for a strong pop down. You want to think about where this area is, right? Where that area is. Look at that strong pop down. And what you want to do is, like the word says, right? The pop and the pullback. You get that, right? You get that pop lower. You get that nice big pullback. Now, at this point, I used to fall for this breakout all the time where it would V bottom off that low, right? That V bottom coming off of that low. And it almost feels like, oh my goodness, we're going back up into that trading range. We're probably not though. We're probably not. Remember, anytime we see a strong move in one direction, it's almost a guarantee we retest that low. Okay, almost a guarantee. So this kind of pop and pullback, if you will, we know the bears have their next big objective down there. If this thing really runs strong, okay, and I'm going to go over a couple more variations for you on gold. Okay, so we're not done yet. I got a couple more breakout patterns we'll talk about on the gold. This will also, of course, apply on the S&P as well. The same breakout pattern, you can easily apply this to the S&P because, again, they're very, very similar. So we roll lower. Right? Instead of seeing the market hold and keep going lower, though, it almost reverses. It kind of V bottoms and reverses. When that happens, what you want to do is just wait for those buyers to come in and try to get long. Once those buyers come in, try to get long, just simply sell into those stops. There's your failure. There's your pullback, right? And you're good to go. Remember, this pattern right here, it's all this is, right? It's a strong move down. There's your pop. There's your pullback. Again, rookie traders have a very hard time. They have a very hard time. You know, things move so quickly. It's like a car crash, right? You're not paying attention and bam, right? Something happens. This really gets traders caught. They're thinking, oh my goodness, it's reversing. I should buy. No, you should not be buying this. That strong move down, they're going to want to, right? They're going to want to fail. And again, that's that pop and that pullback, right? There's your failure. There's your pullback combination as we go. There's your pop. There's your pullback. Roping those, you see it? Roping those buyers, run it, grab that pullback as you go. Okay, it's all right there. Obviously, it's a bigger example of it, right? But markets are fractal. The same stuff we see on a daily chart applies pretty cool how it applies on a real fast tick chart. All right, guys, how am I doing so far? You liking this video so much? I hope you subscribe to it. Hope you hit that like button. And what do you think, guys? If you're watching this video right now, what's the biggest thing standing between you and becoming consistently profitable? Right? Is it finding the right entries? Is it managing trades? Is it mental mistakes? I'm gearing up for a big push for more videos on this YouTube channel. I want to do the videos that you guys need the most. If there's one thing I could help you get over, one thing I could help you get better at, what would it be? Drop me a comment in the comment section. If you're still watching this video right now, you are the person I like to work with the most. And I can tell you're dedicated to this. So let me know in the comment section, what is the biggest obstacle that you're dealing with here? What do you think? If you could solve that problem, you'd be off the race. What is that problem? Let me know in the comment section below. And while you're down there, make sure you subscribe because, as you can see, I'm not messing around with this nightly newsletter. All right, gold, let's do this. Now, gold could be a little bit sketchy tomorrow because, again, we get the CPI report. This whole week might be a little bit tough on the gold, just personality-wise. Not that we can't find some good trades, but just be aware there may be some times where things get a little bit squirrely around that news tomorrow. You get that CPI report tomorrow and the PPI report on Thursday. Gold is a very interesting market right now. Let's see here. What are the main components here right now? Well, one of them is a range, obviously. Right? And we'll kind of lump it together, right? We go up, we're bullish into a range. Okay, buyers, of course, are buying support levels underneath it. They rip it higher, right? You could definitely see the buyers, of course, complete their pendulum swing. The buyers come in now, they try once, they try twice, and we roll back lower. Okay, the range says that we should be trying to complete rotation, right? We should be trying to complete that rotation. We go up into areas of resistance. We short off areas of resistance. The range is the magnet. And then we anticipate that return back down, which just happens to be coincidence, the pendulum swing lining up right at that low a day. So that's where the bears want to go right now. Okay, that's kind of maybe one of the first, components on this chart. Okay, second component is pretty clearly, I think, this big trend line. You know, look at that. Look at that big trend line. We don't have that problem on the E-mini S&P or the NASDAQ right now. Okay. Why is it important? Well, because, of course, if we get a pullback right now, do you want to sell into that trend line? I certainly don't. I want to sell, but I got to be careful. And if you watch this video often, you probably know how I'm going to deal with this already, don't you? We've seen a lot of these setups over the past few months on gold, haven't we? Rising support trend line, trade the rotation. What do you think? Take a wild guess in the comments section for me. Let me know what you think my preferred entry is going to be there. I'm going to tell you here in a second, anyways. Don't you worry. And then of course, probably the third main component is let's zoom out. There's a huge range here, right? There's a huge range out here, and I've got this. We are, I guess you could say, rotating, if you will. Right, from that big bad news is good news, that pop that we saw from last Friday. If you watched last Thursday night's newsletter, you recall that bad news is good news pop that we talked about, right? So that was the bad jobs report being good news for the basically good news for stimulus, which is why the gold popped up. But now we've got that rotation coming down. The reason why I mentioned this is because if the bears can get this thing going, they've got that nice, kind of expanding trend line, expanding triangle, right, to work with down here. So we're going to keep a close eye on that area right there. That area right there is kind of the big, the big home run target there, I think, for those bears coming into tomorrow. So those are the three. I think the three. Oh, you know what? Let's call it four. There probably is four. There's a fourth component on this chart, and that is that open loop. Okay, what's an open loop? An open loop is a strong breakaway move that hasn't retested yet. Remember how I said earlier, anytime we see a strong move in one direction, we almost always see a retest, right? So the buyers would love to retest that high. And then they can get the party really going. They'd love to run back higher. There's a bunch of levels up there. Again, that bad news is good news pop up there at 1782. Buyers would love that spot. I'd be surprised if they can get that tomorrow. Looks like there's probably a lot more resistance wrapped for in at 74.7. So we'll see how we do. 74.7 looks to be a much more reliable target. This looks to be like an overshoot. They got it and they're like, oh shoot, we're a little too high on this, aren't we? They can bring it back down. So 74.7 looks like a pretty reasonable target there, or objective as we call it, for those bulls. All right, let's keep this mojo going here. We know the four components that we have, right? I want to be a seller on this because, again, I want to sell this thing as it's completing that pendulum swing or that rotation as we go. I really like this area right here. This area right there is money, honey. That is a great spot right there, right? Little trap, little failure, right? But again, we've got that stinking trend line in our way. So, like gold loves to do, here's the plan. We wait for that pop. We wait now for that two-try failure. The one, the two, and yes, traps, baby. Traps are always what? They're always your bread and butter. They're always your favorite entry to get you in as high as you can. Now, why would I want to get in as high as possible? Because there's a trend line there. Absolutely, right? So that's why that trap. And again, we're kind of combining two setups, right? We're combining the two-try failure. But once again, right, I don't want to take that two-try failure right there. It is 1-2, but if I hit it right there, there's a good chance we still pop and trap. The trap is where the money is tomorrow. Right? The trap is where the money is. Now, maybe we get this. Maybe the market jumps up, takes out that high, closes the proverbial loop, as we always say, and now I've got a lot more flexibility. Now it's 1. Now it's 2. Maybe we draw a trend line now, right? Get that short. I can still risk small to earn large right there, right? That's a much better spot, and I can definitely take that two-try failure off of that high. Right? Is this making sense? You know what I mean? I don't need that trap. I'm not so sensitive to my price entry on that because, again, we've now completed the objective. The range is the magnet. Yeah, I do have a trend line that I worry about, so I'm not going to want to get in way down here, right? I'm going to want to get in as high up as I can. Okay, that's the idea behind that trade. How do we trade the breakout? The breakout's pretty simple, right? They got to go back up, retest the high. They have to hold that pullback, and they got to make sure they hold it. Simple as that, right? They didn't do it here. Again, maybe they will, maybe they won't off that high. If they do hold that pullback with that 1-2 go, now there, of course, there's your new channel. And we now drill down. We want that first test. The first test is always, always, always the best test as we go. Now, as we go lower, here's the fun starts. As we go lower here now, you want to think about that same type of like pop and pull back, right? That same type of pop back and pull back. That's where the entry is going to be. This area right there, that low coming off kind of the underbelly of that trading range and that trend line, that's going to really be where the the money's going to be there going lower here. So if we do get this thing to roll lower now, think about this area right there, right? We get back above, get up into that area, get those buyers to come in. Remember, I know the range is a magnet. I know it's difficult sometimes, but we're trading the rotation. Right, we're trading that rotation. They want to complete that rotation back down to that low. Get that buyer failure, right? That failure into pullback combination, right? And we're trying to make that run back down to retest the low. What I really wish I had on this chart was I really wish we had like a swing back here to use, right? That way I could go in and find a channel like that. Like that's the one thing on this chart that we're kind of missing right now is some sort of anchor for the bottom of a channel over there like I'm using on the S&P and the NASDAQ. So as we go lower, that's where, of course, that kind of pop, right, and pull back into that failure. That's where the best entry is going to be here as we run lower. And then as I mentioned before, right, we've if we can get that pop and that pullback, we've got this nice runner area down here, 1745, 1744. Get that big trend line I was talking about. It's a great spot for a final target. If we do end up down around these lows, we take out those lows. Remember, there's a big range right in the middle. So how do we trade it? We let the bears try twice. You got it. We let them try once. We let them try twice. Now, couple of variations on this always, right? Maybe it's that trap off that low. Maybe it's a trend line coming. Maybe, of course, right, it's just running those stops. It's that two-try failure into that, right, into that trade the rotation, going back up we go. All right. One thing I haven't talked about yet, that final breakout setup. If the market starts to really run going lower, keep your eyes on those two-try breakouts. These are very, very common, especially when the market really starts to run. This breakout pattern can also be applied, again, to the S&P and the NASDAQ as well. You can apply all of this the same way. Okay, remember, if it really makes that strong run, we get that shallow pullback, you can almost guarantee before we make down to that trend line down there, you're going to get traps, right, coming in off that high. Again, you can apply the same breakout pattern. We call these two-try breakouts. You can apply that to the S&P and the NASDAQ as it goes lower as well, right? That's the third breakout pattern that we're talking about here tonight. Again, that could be applied to all three of these markets or really any market, right? Now, of course, we got a good plan for tomorrow, right? Get some news tomorrow at 8:30 Eastern time. I hope I'll see you there. And we can trade this stuff tomorrow morning. Don't forget, I'll put all of the membership links, all the stuff you guys need to get registered as a new member and join me in the trade room. I'll put that right below the video tonight on our blog. I'll also put a link in the description of the YouTube video. I really appreciate you carving out some time and sticking around tonight with me. I saw the video was so late. Call the office if you have any questions about getting registered or if you want to know brokers and charts or anything along the way. We have live chat on the left. We got live chat on the right, and you can always drop questions in the comments section below. All right, guys, thank you so much for tuning in tonight. I hope you learned a bunch. Now use this knowledge to earn a bunch tomorrow, and hopefully I'll see you there earning right along with us tomorrow morning in our trade room. That's it for me, though. I'm out of here for now. I'll be back tomorrow night with the next edition of our nightly newsletter, but hopefully I'll see you tomorrow morning in the trade room. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.